All right, it is exactly 4:30. Good afternoon, everybody. Thanks for joining us in our monthly pug. We're going to have to get right into this. Please just take a second because we had a couple, actually two requests to review scanning. So with the person's indicators, if you had a question on something you wanted to cover today, type it in. We'll try and see if we can get ourselves acclimated to focusing in on the topic at hand. So type in your question if you had a question on anything that has to do with person's indicators on the various platforms, and we'll get right into it. Today we do have two requests. One for about HGSI, so I'll go over those scan functions quickly because they're preset. But mostly it was a question on Thinkorswim, and we covered this, I thought, last month with volume. I could be wrong, but it shouldn't take that long. We're going to rip right through it. So just take a moment to review the disclosure. And let me also, because we are running a strategy right now in the other room, which is E-mini S&P short from approximately 51.5. The market's at 38 even right now. So we've got that running right now. I'm sure if someone's watching the position, this is what is showing in the other room, that right there. And we'll go over some of those. That's the Algo page that is projecting in the live trading room. So we got two rooms going at the same time, so to speak. So let's get going. Disclosures. Trading involves risk of loss. Wow. By the way, an announcement that I think a lot of people are starting to catch on, like, wow, this is exciting, about coming down and having a real event. And for those that don't want the travel expense, we are going to have the capability of, I believe it's being a Zoom deal as well. So those can check out the seminar online in more detail, or for those that want to be down in October, a month from now, 4 weeks. I'm excited. 4 weeks. So it is Florida, and wherever you are, it'll be right before your Halloween with family and maybe yourself, or you won't. You should be home in time to pass out candy if it's allowed in your state or city, so that your house doesn't get egged from not being a participant of giving candy out to the kids. Just joking about the egg thing. Maybe your house would be toilet papered if you didn't pass out candy. No one wants that, so don't stiff the kids for candy. And also, if it's cold and it's frigid and it's raining, take pity on the parent that's escorting the kids around. Offer them well, I don't know, what the protocol these days is, but a can of beer always kind of worked back in the old days. So just remember that adult beverage for an adult, you can always make that offer. All right, enough said. Let's get into the scanning functions for today. And for those that are interested in, again, the seminar that we're having, I've just posted into the room the link that you can find more information out. Okay, so let's get into a couple little items here. This is our Thinkorswim. So the real issue was to go, could you please go through how you set up the scan on Thinkorswim? All right, well, it's not that hard. We do this a lot, and I think we did it the last time. So basically, if you will X this out, and let's get rid of, you'll start from a clean slate, so to speak. So you add, I don't know if you want to add a study. So we're going to add a study. So if you notice, what I did is adding a filter, add a filter, just go in there and add, and then click on study, because that's what we're really after. And the first thing that comes off in the study drop-down menu box over here to the left is it's alphabetical, and it says ADX crossover. So click on the expanded box, and this might be the detail that you may have missed, the individual that asked for this. So, Robert, basically, if you missed it, here's the deal. It's under licensed studies, right? It's under licensed studies. So if you're looking to see how many buy or sells. It's PPS, license study PPS. So let's say we're looking for a buy signal. On a day like today, the market was down 0.25% in the S&P 500. So we're going to scan. And now this is a little tricky because you got to know how to navigate what you're doing. If you're trying to take a temperature gauge of the market, are there more buys than sells? Maybe you want to look at something a little bit more entailed than the S&P 500. I always suggest go with the Russell 3000. It's at the bottom under public I through R, Russell 3000. For today, we're just going to simply use the S&P 500. It's there just as a curiosity. We'll say how many stocks generated a daily buy signal. Now, if you wanted to add a filter and go down to study, just as a reminder, we did this with on balance volume, I think the last meeting, but I'll just, let's go with, I believe it was a popular study, and it should be on balance volume scan, and it should be right there. All right, so if we're looking for a buy signal, we want to see on balance volume increasing, and if it's a daily time frame we're asking for, then show me at least today's current volume went higher than, say, the last 3 bars. So that would show and reflect an increase of volume. And on a day like today with the market down a little bit, it'd be interesting just to show you that only 2 stocks met that criteria, ConocoPhillips and Old Dominion Freight Line. Now, I don't know why, if you're in the room right now or if you watch the video, one of our members about 2 months ago asked me, or I don't know, a long time ago, hey, check out Old Dominion. I can't believe Old Dominion, ODFL, populated right now. What a coincidence. So let's take a gander of these 2 stocks. We'll go back over here to charts. I'm going to go over here and maximize the sell because I already got it situated with my indicators. So we've got persons pivots. We just have volume for a comparison. So you can see volume histogram. We've got on balance volume tool, and we have relative strength. Now, first off, this is Apache. Second off, it's a 15-minute chart. So let's first change it to a daily, excuse me. Here's a daily chart. Now, let's go over to studies. If we're doing a daily study, just first and foremost, and if you have daily pivots, I mean, I don't know what it looks like to most of you, but to me, it's the wrong pivot to be watchful of with daily pivots, because it's, maybe if you had a 60-minute, it'd be better. But go over here to persons pivots, or just edit studies, actually. And first off, what we're going to do is we're going to just hit the cogwheel and not show daily pivots, hit apply, and OK. So now basically all we have are again, the quarterly pivot, which is the fuchsia, and then weekly pivot point. And that's all that I've had. I don't have the support and resistance. I just have the pivot levels for the quarter, and I have the weekly pivot. That's it. So bottom line, now we can kind of see the chart a little clearer. Let's go back and take a look at COP, ConocoPhillips. So ConocoPhillips, and the criteria was met that we generated a buy, and the on-balance volume is greater than it was 3 days ago. So that's true statement. So now by looking at that, you can always go back and say, double check your work. If in other words, check your scan. Are you comparing apples to apples? Running a daily scan for buys, make sure it says daily. Running a daily scan with a daily on balance volume, that's another trick of the trade. And lastly, if you're looking for buy signals, you want the OBV to increase. It's the opposite of let's do this. Let's say how many sell signals populated today. Now, if you try to run a scan for trying to find out how many sell signals there are with the on balance volume, with it increasing, you want it to switch over to decreased. All right. And now we're going to run that scan by hitting the scan button. I always they're going to come up and warn. So basically, you had 2 buys in the S&P 500, fresh new buys, and you had a total of 11 new sells. So interestingly enough, we had some in the agricultural food product space: ConAgra, General Mills, Kellogg, Kraft, Schmucker, or can we say those particular stocks all generated new fresh daily sell signals with weakening volume structure. So, or the sell signals came on strong volume. Let's take a look at General Mills and see if just a cherry pick, GIS. So bottom line, is the current volume less than 3 days ago? And the answer is absolutely. Were we in a sell signal? True. So you can kind of take a look at those 2 criteria and say, if you're looking for a stronger sell signal, you want something that maybe if the price is back or making newer lows, you would want the volume, in my humble opinion, to be a lot lower. So to me, this is showing weakening condition, but it's not on heavy duty volume, to be honest with you. So it's not a matter of trusting. And this is, I guess, a good question to say, well, how would I use this and determine? First off, I would look at the stocks and say, number one, this is important. There's a concentration, a general theme, that food products got liquidated or sold off today. So we had General Mills. Let's go back and double check ConAgra. It's Continental Grain Agricultural, CAG, ConAgra. Some people call it ConAgra. It's not ConAgra. It's Continental Agricultural, Continental Grain. Anyway, it's the old school. Now, this particular chart, if you'll notice, a couple items come to my mind that intrigues me. The market has got this relative strength tool, the PMC, which is starting to show some relative outperformance or improving conditions versus the S&P. And you say, well, how can that be? Because over time, the market is still greater than its prior lows, and the S&Ps has shown more relative weakness. So while we do have ConAgra did meet the criteria, the volume is lower than the last 3 days. And that's the trade station just popped in automatically. We're going to get to that too. But in the meantime, if you would like to say, well, John, the scan showed how many, according to you or this work, this is all we've asked for is give me a daily sell signal with weakening volume over the last, like today's less than 3 days ago. So it's kind of like a momentum indicator, so to speak, or combination. If the market's down and on balance volumes trended lower than the last 3 bars, that kind of shows some maybe near-term relative weakness. You can fudge around and say, is the stocks generating sell signals, and has the on-balance volume decreased over the last 5 days? Now, think of the logic, and this is important that I want everyone to understand. Why would I go and change a volume from 3 to 5? Well, 5 on a daily chart would represent 5 business days and almost 1 full week of trading, because we don't trade Saturday and Sunday. So we would look at a 5 period. 3 is kind of like half the week, but 5 gives you more like 1 week. If you go to 10, for example, obviously you would say, well, gee, I bet you he's going to come out and say that's like on an average of 2 weeks. And, you'd be right, because that's about what it is. And so running a scan with the combination of how many stocks generated and I'm sorry, TradeStation is going to do this because it's automatically programmed to run my scan. So let me move it out of picture so we can conclude with the concept of customizing a scan on Thinkorswim. That's where we were. All right. So Ben Fishing. I don't know if it's been like you've been or you want to go, Ben. So you're confusing me. I'm sorry. The question is, John, I'm a new trader. I can stare at my screens all day while I do my full-time job. How should I judge to when to take that step? And that's an awesome question, Ben. And you mean the step that step equals your algo class, both. Algo. How should I judge when to take that step? What step? The step? I'm not sure I understand, Ben. When I can take it. John, I'm a new trader. Can I stare at my screens all day? I can stare at my screen. When I think about how should I judge when to take that step? You know, if you're doing a job and you're multitasking on the algos, you can set up, if you have the algo, you can set up alerts, A, B, or you're logged into the live trading room. If you're logged into the live trading room, generally speaking, when there's a trade that populates, I generally tend to tell people, hey, the algo's in a trade by verbal, and also it paints a picture of the position on the chart, for example. And like you can clearly see, this is still an active trade because it didn't connect the dots from the entry of the short to the exit, which it will either carry that position in the night session, which has a risk of 5 to 6 p.m. Because market's closed, and it'll carry the position over, or it'll exit under a criteria of a trailing stop or a profit target. But in the meantime, everything, when there's a trade, it populates on this message board right here, and it tells you what the product is, what the time frame of that product was, like a 60-minute VXX, what the strategy position is, the time the trade was filled, the strategy price, and then the current price, and then the profit or loss, green being profit, red being loss, of what it is on that particular trade. So, for example, in the ES right now, it's showing it's short 2. It went short. If you were in the live trading room, you would have been seeing this, and that's how you could at least take advantage of the live trading room algo program. When should I consider doing an algo trade? Well, an interesting concept to that, and I always tell people, listen, if you're bearish the market and the strategy is long and it's making money, or if you think that you want to be buying a dip in the market and like, oh, I think I'll just buy the S&Ps, and then you look over and you say, well, person's strategy is actually short. So let's do this. I don't want to sound facetious, but this is important. If you want to buy the dip, at least wait for the strategy to cover the short position, right? So, that, I mean, at the very least, having an algo strategy in front of you, it, would either confirm or give a conflicting signal to your own belief or your own strategy. So it'll enhance your own personal strategies, right? So that's the first thing, and I know everyone's heard me say that. If you're thinking of going long the market and this stuff is short, rethink, at least wait until this thing covers the short and goes flat. So that's A, at the very least. I'm sure we would all agree that, okay, that makes sense. At the very least, that's how I can use it. Second way you can use it is piggyback the trade. You come in and it's, let's say, 358, and you go, oh, geez, the thing's already short. I'm missing a trade opportunity. And you go, well, wait a minute. It just got in at 355. I'm only like not even one bar late on the signal. And you can probably join the trade. The same story with any other if you like the setup pattern. So that's when you can consider doing an algo. Another thing is if you like the pattern, like, for example, the position in the SQQ, which did cover, went short. It's going to get clipped. It had a nice little run. It had a couple of great little trades. Anyway, I'm getting a little off topic, but I wanted to answer your question. If you get this particular model actually gets out, it'll stop everything out, or it'll trail profits out, and that's why you see two little short green line. It came close to the profit target, it retraced, and it stopped out it on half, and then it had an emergency stop on the balance. And then as the rest of the day continued, it did get out of the trade. It took a profit, then it went short at the end of the day, took a profit, stopped out a half, and then it went right back in. And as of the close, it's not a big loser. It's still in a trade tomorrow morning. If it gaps higher, we'll see what happens. It'll be out. SQQ is an inverse ETF on the S&P 500. So anyway, that's the algo. Let's get back, just so you asked a live question and you're here live. So I thought I'd do that. All right, next. And I think a lot of people in the room also do the same thing. Connect, hey, I'm thinking of going short. This thing is short. Hey, it is short. I shouldn't go long. And that's the sound logic. And especially if it has a pretty decent track record and performance. And that's one thing that you can kind of look at and say, yeah, you know, that makes sense, right? And in fact, I just shared with you the SQQ. And that's the SQQ performance. How do you know? Because it says SQQ 15 minutes, and that's the performance of what I was just showing you. So I don't want to bait and switch, show you an SQQ and then show you a better performance on Bitcoin, for example. No, this is SQQ, and this is since March of 29. And then because of that exit on the trade, it just posted another new little green dot, which means it's a new equity high. All right. So A, is the reliability in the signals in this insanity of a world which we are in, this monstrous market environment. And that's something that you could say, well, you know what? Not every trade's a winner, but over the long haul, this thing makes money. And if I have an opinion that I don't think the market can go any higher, but that thing's long and I'm looking to go short, maybe I should wait, right, until it exits the strategy. That's one of the ways. And you can always go in and find out live, real time, not after the fact, as it's happening. What is the current position? It's painted a picture on the chart. It shows you what the position is, where the entry was, and it's got it even written down on a bulletin board thing. And that's the live trading room, algo room. All right. Now we're going to get back to what our topic du jour of the session was as well, which was running the scan. Now, I just increased the on-balance volume. Show me if there's a daily sell and is the volume, is there strong volume relative to the last 10 bars? And, ironically, we increased that list a little bit. eBay pops up, and that kind of an interesting one. So let's take a look at eBay. And as you can see, at the very least, you could say, that's an unusual scenario. Volume histogram, to be honest with you, I don't know what it really will tell anybody, because it looks like maybe a couple individual days were on high volume, but a volume trend tool, this is not. I don't know what this is trying to tell you. It just looks like that's about the average volume, and every once in a while you get a couple spikes greater than. Whereas on-balance volume is an actual trend of volume tool. When the market goes up and you see a rise with improved relative strength, you generally have a leadership of volume and relative strength will kind of give you insights that there's a breakout occurring, right? Now what's happening is you've had all these little sell signals in here, and currently we're in a newfound sell signal, and yet volume is the lowest it's been since, well, we were here. So the logic would be if eBay, which is now below the daily pivot, it's in a fresh daily sell signal, it's failed the rally. If it wants to fall off and tomorrow, the next day, we get continuation, another 1 to 2 days of weakening volume structure, it would make sound logic that if the volume level gets back to where it was here, and if volume is a leading indicator, then price might be prone to get back in here. So if there is a shot that you're going to see a downside momentum move, then the odds are using the on-balance volume saying, hey, we're back to where we were here in on-balance volume. And when we were there, prices was around here. So it's already giving you maybe a subtle hint, a small clue that prices could retreat on continued weakness. And the objective would be somewhere right into this, I don't know what you want to call that, 65-ish, 63 mark. So here's another interesting aspect. Let's clear out these drawing sets. Yes, get rid of all those gobbledygook lines. And then we can also take a look and say, interesting component here, a lot of harsh volatility. So, some could argue that, it's not a good argument. It's not a clear picture, technically speaking. Some could argue that this could be a kind of a flaggish formation, right? if this is an A to B, if that leg or that trend there, and this is a counter trend rally, and if the market wants to continue to break down, what is the measurement objective? Ironically, if you work with me here a little bit, if you take the difference between the high AB to CD, you know what's interesting? This particular measurement from that high where I drew the top of the swing channel to this low, and to that would be AB line. This would be B to C. If you add the AB line and add it to the C point, it extends down and gives you a price projection of about, oh yeah, right here, D. So if there's more relative weakness, even I guess a little mild ABCD wave pattern setup is suggesting, and because on balance volume broke down and made a new relative lower low in volume, suggesting that there is potential for the market to go down. How is that important? Well, we just found this out on the scans, and if you're interested in maybe a trade setup, now you could go, hey, maybe eBay's got a short-term relative weakness coming with the broad market. Maybe the Fed doesn't, do things kindly, and maybe perhaps we could look at options and and maybe go, if this takes the first AB leg was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days from peak to trough. So 10 days. So 10 days, if it wants to complete the formation, another 10 days out, if it takes 10 days for one leg, it might take 10 or less days, or about 10 days. So you could go 2-week out options and look at to see if there's any increase in put purchases or increase in volume on puts or strike prices going out for the next 10 days, or maybe a little bit more, like maybe 30 days, something of that nature. And then you pinpoint something using the scan. So how did we come up with this? First off, it was because of a scan. We used volume, and we have obviously something that's another interesting aspect is the relative strength, the PMC. While it's still positive, it's dark blue, it's starting to show signs of weakening conditions. So if it starts to turn another bar or two negative, I mean, the odds are you have a negative price pattern. Is it a guarantee? No, but it certainly does have some mitigating circumstances. And again, if tomorrow you get another leg lower in volume and the price is just sitting kind of here, I would suggest that, easily volume is a leader of trend direction, generally speaking, and that it would make sense that we see possibly a retracement into the 66-ish area. Once again, it's not perfect, but if you're looking for a measured objective, and how did we came up with that? It was because of the PPS scan and looking at on-balance volume relationship. All right. So that was how we would put together finding scan opportunities, taking it, let's say at the very least, the temperature of the market. You can not use any volume at all and just go, hey, how many sell signals were generated today with today's action? After all, a lot of people are all excited about, the market lost less today. In the Russell 3000, you had some oil, which we showed Cabot was already in the other specialty retailers, some banks in there today, and a few, not a lot, but a few of specialty retail products showed up, some software companies there. So, and then Toll Brothers, Vista Outdoors, which was, I forgot the gun manufacturer. Is Vista? Well, anyway, I think it's the gun manufacturer. It's not 2 syllables. Sounds like it's not Strum Ruger. It's who's Vista Outdoor? It is a gun manufacturer, right? All right. Decker's Outdoor Sporting Equipment. Outdoor Deckers owns not that or outdoor sporting, but they own Uggs, Hyatt hotels. So there's some interesting ones in here. eBay. Well, we came up with eBay already. So there are some interesting ones that populated that show that there could be some more relative weakness. The market. Let's lastly just say, let's take since we're on the subject, instead of looking for sell signals, on a day like today, did we get a lot of buy signals? So if you want to know, it's not just my opinion of the market, but let's say what the market condition is. On a day like today, did we generate buy signals just on a whim? And if we did, what stocks populated? Now, that's interesting too. We had almost a little bit more sells than buys. And so what's really interesting, and I say this a lot with Thinkorswim, their scan function, if you ran this scan at 3:45 in the afternoon, it would not be telling you what scans populated from the day before. It would say on today's close, in 15 more minutes, if stocks are at this price or higher, they're going to generate daily buy signals. Why is that important? Because a lot of times buy signals turn into gap higher openings the next day. And another thing that I like to look at is to see if there's money moving into a sector, because the more daily buy signals that you see, it might not show up as a sector ETF, but 5-6 names out of the sector generate daily buys. That's kind of showing that money's moving into that space. Today, we had a few biotech names. We had, obviously, some railroad companies, Old Dominion, which showed up on a different scan. Ironically, we had a bunch of like ag staple products, ConAgra for one, generate daily sells. But then we had Church & Dwight. Some of you don't know this, or maybe you do. Arm & Hammer baking soda is Church & Dwight product. So it's kind of funny. We had a little staple there. And so nothing really pops out on the screen here of anything of mass importance. But if you add an extra filter and you said, you know what, I go to study and I'm going to add the on balance volume, which is under popular studies. And, you can, 3 days might not be enough, at least 1 week, 5 periods. That gives me that this is a stock that not only did it finally generate a PPS buy today, but over the last week or 5 trading sessions, there's been an accumulation, a buildup of positioning into that stock. And that's giving a little bit stronger probability that there's going to be more follow through. Now, when we add that feature, this tells us, hey, we got a lot of stuff today. Oil and gas stills there. We had an Uber populate. We have Calmaine Foods that I believe they're an egg maker, or they're an egg producer company. They produce eggs like, bacon, ham, and eggs. Spam, ham and eggs, right? Church & Dwight. So, I mean, there were some things in there. Anything different that would say, is there anything that I'm sharing with you that I don't do differently? Not really. This is exactly what I do. I just use other tools. By the way, this is HGSI. And what the difference is with HGSI, we have predetermined scan functions. Daily sell, daily buys, a buy signal near weekly resistance, a daily sell with when it's in a weekly sell. So that's 2 time frames. The weekly's in a sell. Maybe it had a couple 3, 4, 5 day recovery, which, right, is it like a dead cat bounce? And then it generates a daily sell. That would be a short-term daily sell while the weekly's in a sell. That's a continuation pattern. You get 2 time frames, both in sync, going in the same direction. Man, that's something I want to know about, right? And that's why a lot of times we go through it every day. I want to know how many stocks generate buys, how many stocks generated sells, and under what condition. Now, with the difference of HGSI, this is not real time, it's end of day. And so this scan result here was from yesterday's close coming into this morning. Now, I didn't pick up on this because I was looking at other things, but this is daily sells. I look at when I use a combination of a daily buy signal, I want to generally look at something that's got a PMC ranking of it's outperforming the market, or maybe it's started to weaken, but it's still positive, but certainly it's improving. Anything that's lagging that generates a buy signal, I'm not really one to really want to go with. This is Joby Aviation. We talked about it. It's very volatile, as you can see this morning. This is, again, not reflecting today's price value. It's in a weekly sell. It just doesn't have the makeup. Look at the volume trends, not really doing much. Anything that's got a weakening or lagging red on the PMC, I don't really trust it as a buy. By the way, the inverse is true, and this is also important. Anything that's got an outperforming and it's in a sell, I don't want to sell something. That might be just a little profit taking. Sell on real weakness, increased volume, or relative strength weakness, but don't sell on one day where it's got a general sell signal and the relative strength's outperforming. That might be just a small little pullback. What's interesting about today's scans, we focused on a couple things today. Delta Airlines, by the way, I mean, the relative strength's been improving as it's been basing out and volume's starting to pick up. Other names that populated, which I can cherry pick because I just saw one. You had I think Stitch Fitch with earnings came out today. Stitch Fitch. Now, this was saying yesterday, as of yesterday's close, it generated a buy signal. Volume was iffy. Earnings came out, was pretty decent. And then Uber, ironically, Uber Communications outperforming. Uber's outperformed. So, this one was showing that even today, it generated a daily buy, and I think it got upgraded and it was up. So this is one that over time, let's look at Uber on a weekly basis. So the relative strength is just on a higher time frame improving. By Friday, if this stock gives a buy signal on a weekly basis, one day pop is not, to me, trustworthy enough because we've seen that this year. Market stocks pop and then 2-3 days later they flop. But if you get a weekly buy signal and the daily's in a buy, the relative strength and the volume's trending up, that means it's now in a trend reversal and it's a strong trend. And it's more than just getting in and then getting out quickly. It's something you can ride the trend a little bit better. So the scans and certain tools with those help me to determine, maybe not 100% of the time, but it helps improve my odds that I'm getting into a stock or a sector of a group of stocks that generated buy signals that give me a better odd that this is not just going to be a quick pump and dump type scenario. So that's where the difference between the scan relationships between different software companies perform. With HGSI, I mean, they've got so much behind them. It's ridiculous. If you're just using Thinkorswim, it's so powerful, it's unbelievable. They really put together a phenomenal package. And a lot of times you see this in the live trading room. I actually use that tool. So, and I share the results of those scans in the live trading room, which is why we have two trading rooms, right? We have the main room where we talk about this stuff. And then we have the algo room where people may want to just mute me, not listen to the stock analysis that we give or stock trade setups, and just trade off of the algo programs. Okay. So Boris is asking me my opinion on the market. I want to get into the next thing I will do is get into TradeStation scans, which are a little bit different because it's a good segue to answer your question. First off, when I'm looking to answer your question about the market, in any bull market, some stocks don't go up. In any bear market, some stocks don't go down. Right now, we have a mixture or a rotational correction. We've had, in my humble opinion, something that was a very dynamic environment this year where we were seeing the equity indexes based on maybe 11 stocks, 10, 11 stocks were going higher. A lot of other stocks and sectors were going lower, namely airlines, transports, rails, energy wasn't performing. Utility stocks weren't performing. Staples weren't joining the party, but it was all Tesla, Amazon, Apple, Microsoft, Facebook. And all of those cap-weighted tech names weighed on the market. Meanwhile, you had maybe some other hubble bubble names like a Costco pulling some weight. And then you had other stocks in the queues, for example, like a Starbucks, American Airlines, a few others weren't doing great. So each and every stock index is weighted differently. And we have here a certain page. So we'll start with the S&P 500 because that's probably what you're more interested in talking about. We're still in a PPS sell. And I'll get rid of my little average trend line and let's delete it. What we created on this page was just to give me testifiable evidence of, and that's part of the, it's a good question to ask, well, how do I get my analysis? And how do I get my opinion on the market? For that, I'm looking at the S&P 500. First, we're at quarterly pivot resistance. We went through it a little bit. We were very cautiously, what's the word, guys, I used for the last month and a half? Cautiously pessimistic on the market. Cautiously pessimistic. We went from bullish at the beginning of the year to cautiously pessimistic. We noted that the market was deviated away from a moving average. And it wasn't until we started to see the advanced decline finally do something different a week ago. We broke below this rising MA, moving average, and we started to see a moving average crossover of the advanced decline analysis. This is the advanced decline of the S&P 500. And as you notice, even today, we were 171. If there's 500 stocks, 171 shows that there was 329 stocks down. So as a group, more stocks are down losing than winning. And that should weigh negatively on the valuation of the SPY. So if we take a quick look at the direction of this fuchsia line, you would say, gee, it's all the way back to where prices were down here, about at 425. If we don't see any kind of mojo mamba jamba recovery rally quickly, the supposition at the advanced decline continues to show erosion. 425, that line in the sand, or slightly lower, is more probable in the next week or two. And that might freak people out that think buy the dip and it's all good. And then by that time, then people will scratch their head going, gee, maybe this tax talk and maybe the economy's not as strong and maybe Jerome Powell, the tapering. I'm not sure what's going to happen out tomorrow. But as I can tell you right now, the market sold off more stocks in the S&P 500 as a cumulative value have declined. Heavier volume. Stochastics is a little oversold. We're not in extreme, and which can stay oversold for about, I don't know, another 2 weeks at least if it wanted to. The Mcclellan Oscillator, what is this tool? We took Sherman McClellan's work and modified it a bit and used it to take direct data from the S&P 500. This is a momentum oscillator of breadth. And that's a whole different story of how it's but basically, when it's in a declining mode, you have several different things: bearish divergence patterns, zero line breakdowns, bullish convergence, overbought readings, and oversold readings. Funny thing is, from a historic standpoint, the McClellan, or at least this modified McClellan oscillator, isn't at it can sit here at this lower, and it's already pre-made, so I can't change that red line. It's getting closer to a slight oversold condition, just to be honest with you. But it can be oversold and have a dead cat bounce and get even more oversold before we start to see a rise and then a bullish crossover of the zero line. So for right now, I mean, indicator, new lows. Volume, new low. Another different volume indicator, more newer, bigger lows. The momentum of the volume got a little heavier today on today's sell-off. The momentum red bar is bigger than the prior bar, bigger, and you're starting to see a buildup of selling pressure. So they're not buying dips, they're selling rallies. And until this starts to pop positive, until that reverses, the market's going to remain under pressure. That's the view of the market right now, not because I'm flipping a coin or rolling a dice, based on indicators that are relevant to the S&P 500. Advanced decline is the accumulation total of the amount of stocks in the index. Volume is the participation of said index trading. And then finally, we have our PPS and our pivot levels to help us. And then lastly, one price-based indicator, stochastics. So quite frankly, we actually have, believe it or not, 3 price-based indicators. 4 if you look at the moving average. We have Person's pivots, that's based on price. PPS, that's based on price. We have a moving average based on price, and then stochastics based on price. Next is a moving average momentum indicator of breadth. That's about the advanced decline. We have a volume, and we have a secondary volume indicator. This one's mine. This one's Joe Granville's. We modified it by adding a moving average. So when you look at PUG meetings, what does it talk about? PUG stands for Person's User Group. If you're using any of my products or any of my indicators, we're here to share with you how we get the best use of them and what are we doing. More importantly, it's a great question. How do you use the damn stuff to determine the condition of the market? So the condition of the SPY, I think you would agree that based on those indicators, it ain't buying the dip mentality working right now. Next, let's take a look at the Qs, because that's another one that's kind of getting a little spooky. We had a dead cat bounce in OBV today. My volume indicator is kind of sitting here going like it's neutral. It's negative but neutral because it did make a newer low. The Mcclellan Oscillator is at an extreme oversold level as of today. The advanced decline made new relative weakness. So that suggests that possibly we could at the very least have just a retest of the lows, unless this volume really starts to smack lower again and we see a continuation. Just because this volume didn't go way south, it doesn't suggest that we buy dips in the Qs yet at all. So we could see some two-sided trading, and then it could see another continuation down. Until the indicators turn back positive, breadth meaning more stocks in the Qs are going up than down, this line has to change, then it would be safe to buy. And then in this case, what's different about this sell-off is open, close, open, close, open, close. We've stayed below the moving average, and now we got the moving averages kind of falling. And then, that's different than the sell-off that you had here, different than you had over here. I mean, it's just a little bit different. And if it wants to come back to quarterly pivot, that's 340. That's a hell of that'd be a hell of a hickey. That's something that's you're gonna be able to hide. So in any event, the Qs. Let's look at the Dow Jones. The Dow had one big upsetting trade today. It was called Disney. Apparently the CEO was at a Goldman Sachs conference and said, hey, our subscribers might be we might not see as strong a subscriber. Now, I don't know what to read into that. I think it was a treacherous move by Goldman Sachs and their traders, because they really pressed the market and really dumped in seconds a major stock like that. So I'm not sure they got insider. I don't know if that would be considered insider trading, that it's their own conference and all the traders are listening to this and no one else had immediate access to it. That seems kind of weird. I would think that the SEC, and I'm sure you might say, gee, wait a minute, there's a private bank giving a conference for their own traders, and they invite the CEO, and he says, yeah, we might not have good numbers in the quarter. And all the traders under that company start selling their portfolios out. Meanwhile, everyone else has got sitting around going like, well, how come I didn't get invited to that speech? I think that's a gray area of not having complete access. Anyway, that weighed on Disney being a part of the S&P 500 and the blue chip sector. We take a look at one key casual observation. We've now formed in the Dow Jones Industrial Average 2 daily closes less than. When we've closed below a pivot, we haven't really seen it. I mean, we had a couple closes below pivot, and then it just kind of went right back into a freaking buy. If this isn't going to generate a PPS buy pretty soon, with the deteriorating breadth in the market like this is suggesting we've got a lot more, or at least another leg lower at the very least, it's supporting an idea we could get back to maybe 325-ish, maybe 327 in the Dow. So volume, really look at the trend of volume. If that's pointing down and the volume indicator pointing down like it is and the breadth pointing down, I'm not a big fan of saying, hey, let's buy that dip until we get back above maybe a new pivot level. And this, by the way, is quarterly pivots. And when does the quarter end? The end of September, and we have a new quarterly outlook. But this is an interesting observation with the Dow. We finally breached and broken below, and we haven't seen that for quite some time. There was one little one that happened a year, like literally almost 10 months ago in November. It broke the pivot. Once it got back above quarterly pivot, we were off to the races. Breaking below pivot, and it's really hard to find an example. I guess we go over here. Breaking pivot and staying below pivot with falling momentum indicators and volume, etc., and breadth, and you get the advanced decline breaking. This is before, as COVID was happening. This is, again, not a very positive outlook for right now. I'd rather be late to the trade than early, finding out there might be a little bit more downside left to the market, Boris, just to give that sense to you based on this work. Finally, last but not least, and we'll wrap this up about the work, here's the Russell. I thought we were missing an opportunity the other week. I go, it's still in a trading range, a wild range. Now, relative to SPY, relative to the Dow, notice something that's different about the indicators. While the advanced decline just made another new low, the Mcclellan Oscillator slightly oversold, and volume trends going up, not down. So this means that if there is any weakness, what this suggests is that there might be a better bullish play of a recovery, because it looks as if somebody been buying in the dip in here and it's losing relative to the other markets. It's literally losing less, right? So it seems that maybe people have, at the very least, my guess in determining this, a rotational correction out of possibly mega caps a little bit. Maybe people are looking at growth, but obviously these indicators are taking a look not at one market and making a judgment of all, but we broke down the difference in what the weighting effect of stocks are via the Dow, the NASDAQ, the Spider, and again, the Russell small cap. So it's if we do have any kind of temporary, or if there is any more follow through relative weakness in the Russell, and the advanced decline starts to, price can go down, but the advanced decline starts to improve and the volume starts to improve, it's highly bullish for the market. And we do have an event from a seasonality perspective. It's called the January effect, and sometimes it occurs early in the year, like and can last going from, like, say, the early part of October, because people are looking at the major indice averages and they forget about the IWM. This is very important aspect to kind of follow to see, and maybe run to see a chart on your 60-minute charts for the Russell and an end-of-day chart on the Russell on IWM, because we are sitting here at more of a, even with the Mcclellan Oscillator concept on the Russell, you'll notice that from this point where we made a low on that close to this point where price made a newer low, the oscillator made a higher low. That's a little form of convergence. The market as well. The market was, I guess, unchanged, up a little bit, whatever you want to call it. But if you take a look at the volume structure and even unbalanced volume, people aren't really aggressively selling this market. So relative to the Qs, relative to the Dow, relative to the S&Ps, to be honest with you, at this point, today's close, the Russell has a little bit better strength in it. What I would want to see, because, just because people are, that's what on balance volume is showing, there's some buying going into the market, the advanced decline needs to improve greatly. So we need to see at least a 2 to 3 day improvement of the breadth of the market start to improve, at least get it back above one moving average, for God's sakes, on an increase of volume. And that would be, a good sign that you could probably look at a recovery out of the Russell. So that's the difference between how to read the indicators, what they're about, and using the person's indicators. So today or every day, my scans on TradeStation program, I hope that helped you out, Boris. Taking a look at, we classify different filtering mechanisms. Show me if there's a daily buy on a stock that had been in a weekly buy. So maybe it pulled back a couple days. In here, well, ironically, ConocoPhillips keeps showing up on our screen on the different scans. And so let's take a little gander of ConocoPhillips. So in the energy space, someone really put the jam. It's in a monthly buy, monthly volume trend. This is a volume tool. It's sold off. The momentum's weakened a bit, but so did price from here to there. It weakened, and that's what that reflects. The weekly volume been very choppy. It's starting to show an improvement. The red momentum is getting less. They're getting higher lows. The daily looks like we're improving. And again, looking at the relative strength, wow, it's way outperforming relative to the market. So ConocoPhillips is in the top contender for maybe some upside, by the way. So that would be in the energy space, something to pay closer attention to maybe tomorrow. This is showing how many stocks generated a daily buy combination in the weekly sector. We also, because the high close doji is a very formidable setup and trade system, it tells us when to get in, our holding period, our stop loss, and using a 1-to-1 risk-reward ratio. But it also something that I like to look at is how many stocks generated new, fresh daily buy signals. This is AutoZone. I do know that AutoNation, let's take a look at AN, AutoNation in the auto car dealer space. Also you got, besides AutoZone, you had ORLY, O'Reilly. We know about that. We already ran these scans the other day, and it did pick up that there was some buying interest in some of these car parts. And so finally you got more follow through. So the scans do give us some good intel as to maybe where the institutions or traders are putting their money to work. And so I always like, just as a heads up, based on today, by the way, here's one. This is as of today's close. SoFi. SoFi generated a daily high close doji today. Interesting. And if it Friday, thanks to Jerome Powell, if it's here or higher, it's going to be in a weekly buy and a daily buy with improved volume trends, right? It's a small cap. I'm not sure it's in the NASDAQ. It's not in the Russell, but this one, SoFi, has a very a low risk trade after, say, Wednesday through Friday's close. If it's here at 15.17, it's gonna complete. The arrow is not telling you it is definitely in a buy. It's warning you that if this is the current week, wait till Friday. If it's at 15.17 or better on Friday, it's going to populate at a hard buy signal, and you would probably want to buy into that on the close if the conditions are right, and the conditions would be volume and relative strength tools. And both of those are reflecting, man, this might be something to roll into. Let's take a gander here just to satisfy our curiosities. This is high close doji scan using TradeStation. And as you can see, man, today we had something like over 200 buy signals, some transports there, a lot of small cap stuff, excuse me. We had in technology, Box, Paycom software, interesting. And now to wrap things up, let's just go and just so I don't leave you in suspense, how many daily sell signals, low close dojis were generated? So what that presents, we had something like less sell signals. We had more buys than sells. Now here's the trick. If the sell signals are large cap weighted stocks, guess what? That means the index can go down, but other stocks can start to go up. And that's one of the things that you can kind of pick out. We've got I saw Big Lots in there, a Western Union in there. Wow, those are ugly. Talk about the market already started to sell off on these names before this week. That's what, I guess, case in point. Here's a June high of Western Union, for God's sakes, right? Marine Max, HZO. I mean, that didn't just start to sell off over the last week. There's a lot of names, and the most famous one that you're probably aware of is this guy called Sam Adams Beer. Can you imagine? It was a big favorite amongst, I guess, the TV stars on the financial stations. They just love this. And then, the CEO is on someone's little show. And it's great leadership. It's awesome stuff. They got that new product. I think they were talking about the hard seltzer business. And, it didn't work out so well. And just to let you know how equity markets can do if you're not paying attention to your stocks, this company was at 1,350 in April, May time period. It's trading 520 now. That's brutal. And I mean, so the bottom line is there are some landmines out there for all practical purposes, but a lot of stocks have already sold off. And that's why we look at some of these names. It's the mega cap stuff that hasn't. This was Disney, and this is what it did today. Just boom. I mean, everything was looking good. There was some good intel on this. And I still think, as you can see, the higher time frame is in a sideways range, but you don't want to see a stock. If it closes here Friday, Disney's on a weekly sell mode. Anyway, I just wanted to give you an idea of how do I look for trade opportunities. And if the market is supposed to be bullish, look to buy a pullback, and then you stop. So remember, stops are not for sissies. If the trade is going to work, you'll get rewarded. If the trade doesn't work, don't sit there and argue with it, right? And then, because then we get emotionally attached to a loser, and you turn a trade that you could have been out of, in a couple hours, and you turn it into a 4-year ordeal. So anyway, my 2 cents. I might be exaggerating there about holding on to a losing trade for 4 years. That concludes our time today. I want to say thank you all. I hope I answered your questions. And if you're interested more in spending time, I was talking a little rapidly today because I did want to cover some of the scan results. And I thought it was really nice that Boris said, hey, show me how do you work this stuff, right? I mean, show it in an applicable, how I can apply it to help me make money or better decisions. What do the tools do? And that's where I think we come into a PUG meeting. We help people answer questions that they send by a first email. And then again, like today. So thank you for joining me until the next PUG meeting, or if you're interested in signing up for our live event here in Florida in October, the link was pushed into the room, and you can certainly find that on our website. Thank you, guys. Are any of the PUG meeting focuses on the futures market? Keith, well, we just shared, we started off with, first and foremost, the Algo room has this little thing. If you're talking about E-mini S&P futures on an Algo. So, yes, the indicators work since commodities are very limited to, crude oil, et cetera. This is more geared for equities, how we run it. Do we run it for commodities? Absolutely. In fact, I'll answer that question because here's our main page, and here are our future products. And so the answer is yes. But next time, if you send in a question or type it in, we'll try to get that before our time's completed. Thanks for your question, though, Keith. The answer is yes. Have a great evening, everybody, and we'll see you next time.